Look, I know you're watching your savings disappear while everyone else seems to be getting richer. Well, here's something that's going to absolutely blow your mind. Gold just hit $3,622 per ounce yesterday. That's up 42% this year alone. Meanwhile, your savings account is paying you what? 0.61%? I'm about to show you the mathematical reality of what's happening to your money and why the people in charge, they desperately don't want you to figure this out. All right, let's do some real math here. The national average savings rate, 0.61% according to bankrate.com. So if you had 10 grand in savings at the beginning of this year, your bank graciously gave you about 61 bucks. That's it, $61 for the entire year. But if you had put that same 10,000 into gold at the start of 2025, you'd have $14,200 today. That's over 4,000 more than trusting your safe bank account. Now I know what you're thinking, but gold is volatile. Sure, but here's what the Federal Reserve data actually shows us. The median American has exactly 8,000 in total savings. Picture this. If you lined up everyone's savings in the US from $1 to billions, right in the middle sits 8 grand. And here's the brutal truth. Even that 8,000 isn't actually safe. With inflation running at 2.7%, you're losing $216 every single year just in purchasing power. Your bank paying almost $49 in interest doesn't even come close to covering that loss. You're going backwards every single day. Now here's where it gets absolutely insane. Goldman Sachs just raised their gold price target to $3,700 by the end of 2025. That's their third upgrade this year. Think about that. Why? Because they know something most Americans are completely clueless about. The Federal Reserve is mathematically trapped. They're desperately holding rates at 4.25 to 4.5%, but they're under massive pressure to cut rates to prevent a recession. Here's the thing everyone needs to understand. When interest rates go down, gold prices go up. It's basic economics. And right now, markets are pricing in an 87% chance of a rate cut this week. But get this, the US dollar has fallen 11% since January. That means everything you buy costs more, but your paycheck buys dramatically less. The smart money already knows this. Central banks bought 166 tons of gold just in the second quarter of 2025. That's 41% above their normal buying levels. They're hoarding gold like their lives depend on it. Look, this isn't just about making money. This is about financial survival. China has been aggressively buying gold for 10 straight months. Russia added 450 tons in just the first half of this year. Poland bought 90 tons last year and wants to increase their gold reserves from 13% to 20%. Turkey, 26 consecutive months of gold purchases. Why are they doing this? Because they're systematically getting off the dollar system. China's treasury holdings are at a 14-year low. They're literally dumping our government bonds and buying gold instead. Here's a stat that should terrify every American. For the first time since 1996, central banks now hold more gold than US treasury bonds. Think about that for a second. The world's central banks trust shiny metal more than they trust the US government's promises to pay them back. And Trump's tariff policies only making this worse. Every single tariff announcement pushes more countries toward gold and away from dollars. The writing is on the wall. Now let's talk about what this means for you personally. And it's not pretty. The median American retirement savings, just $87,000. But here's the terrifying part. 33% of Americans have zero retirement savings. Nothing. Financial experts say you should have 10 times your annual salary saved by retirement. You make 50 grand? That means you need 500,000 saved. At current savings rates, most Americans will literally need to work until they die. But here's where gold becomes absolutely critical. Since 1971, when Nixon completely abandoned the gold standard, gold has averaged 7.78% annual returns. Your 401k averaged about 6.8% over the same period. But that's before management fees, expense ratios and taxes. After all that, you're looking at maybe 4 to 5% real returns. If you put $1,000 into gold back in 1971, when it was $42 an ounce, you'd hold about 23 ounces today. At roughly $2,600 an ounce, That's worth more than $60,000 today. The same $1,000 in a savings account growing at an average of about 3% per year would only be around $6,000. Even the most conservative financial advisors now recommend 5 to 10% of your portfolio in gold. But I know what you're thinking. I don't have a portfolio. I barely have a checking account. Here's the reality. You don't need to be wealthy to protect yourself from this madness. You can buy fractional shares of gold ETFs for as little as $1. You can purchase physical gold coins starting around $100. Now, I'm absolutely not saying put your emergency fund in gold. You still need 3 to 6 months of expenses in cash. But after that, after you've got your survival fund covered, that's when you start thinking strategically about gold. The smartest approach? Dollar cost averaging. Buy a fixed dollar amount every month regardless of price. $50 a month, $100 a month, whatever you can actually afford without going broke. Your options are simple. Physical gold coins and bars, gold ETFs, or even gold mining stocks if you want higher risk and higher potential returns. The key is just starting somewhere. Billionaire Ray Dalio dropped $319 million on gold in 2025 while slashing his stock positions by billions. That shows the ultra-wealthy are making this shocking move. Watch what they do, not what they say. Look, I need to be brutally honest with you about what's coming down the pipeline. US government debt, now $37.43 trillion as of September 4th, 2025. It's growing by $5.72 billion every single day. Interest rose from $881 billion in 2024 to $952 billion in 2025 and $1 trillion in fiscal year 2025-2026 before climbing further to nearly $1.8 trillion in 2035. Think about that insanity. Interest on the debt is already larger than spending on Medicare and national defense. It is second only to Social Security. Social Security is mathematically set to run out of money by 2034, Medicare 2031. The government has exactly 3 options: cut benefits and face political suicide, raise taxes and crash the economy, or print trillions more dollars. Guess which option they'll choose? They'll fire up the money printers because it's the only politically survivable option. And when they print money like there's no tomorrow, gold prices go absolutely vertical. Meanwhile, 95% of central banks expect global gold reserves to keep exploding higher. The world is actively preparing for a post-dollar financial system, and most Americans are completely oblivious. Look, I can't tell you exactly what to do with your hard-earned money. I'm not a licensed financial advisor, but I can give you the cold, hard mathematical facts. And the facts say gold is positioned for massive gains. If you want to learn more, we're dropping a follow-up video soon whereby we're breaking down exactly how to calculate the right gold allocation for your specific financial situation, plus the 3 biggest mistakes people make when buying gold that cost them thousands. One last number that should wake you up. If gold reaches Goldman's $3,700 target by year end, that's another 2% gain from current levels. Your bank savings account, still paying a pathetic 0.61% while inflation eats you alive. The choice is yours. If you're finding value, hit like, subscribe and share. Help us reach our first 500 subscribers and spread the data makes sense knowledge. Good luck.